All right. So next we're going to get to Vlad. Vlad, how are you doing today?
Pretty good. How are you, Jeff?
I'm good. I can hear you. So that's a good
Excellent.
start. Vlad and I know each other very well.
We've done a lot of coding together.
A lot of coding. That is actually right. Um, I can hear you.
Nice to
Let's
see
see.
you.
And I can see a very handsome gentleman
Excellent.
next to a slideshow. So yeah, we see your screen just fine. Vlad, I know we're starting you late. I apologize for that. I don't want you to feel rushed during your presentation, and if you need to go over, you're certainly welcome to. We haven't really ran this late before, but you're the last presenter before me, and so nobody's going to be upset with you if you need to take a few more minutes. I don't want you to feel rushed. I want you to be able to focus on what you want to talk about.
No worries. I'll try to cover everything, but maybe some of the concepts I'll go through a little bit faster.
Yeah, no, take your time. Take your time.
All right.
Seriously.
Sounds good.
It's all you.
All right. Thank you. All right. Thank you, Jeff, for having me. This is, we've had a few events before, so I'm glad to be part of this presentation. And I'm going to talk about how to improve your trading results using common price patterns. And I'm also going to talk about how to, at Tradespool we build technology that automatically finds price patterns, recognize them, and tells you what the support resistance levels are and what the trends are. And that will be kind of the focus of my presentation. We've heard the previous speaker talking about, hedge funds and fundamental analysis, event-driven approach to portfolios. And Catalyst, at Tradespool, we do everything based on statistics. We have some fundamental analysis. For the most part, we do trading based on statistical analysis and predictive analytics. We have neural networks and artificial intelligence, and we believe that technical analysis can, if you have certain, recognize certain price patterns in the market, especially when there are no events. It's very hard to find. If you're event-driven, usually you don't know exactly when that event is going to happen. So you have to wait for that event, and you can wait a month, or you can wait years. But if you trade in between the events, when you know that events do not occur, like in between earnings season, then you can find common price patterns, and this is something we're going to discuss today. So for those of you who are new and haven't heard about Tradespool, this is my brief bio. I was Executive Vice President and Head of Technology at Options Express from its inception, 1999 through 2007. How many of you heard of Options Express? Just wanted to see. They were online broker-dealer acquired by Charles Schwab in 2011. The company went public in 2005. At some point, it was worth over $2 billion. So I'm very proud of that experience. And since I left Options Express, I worked as an investor and consultant in several financial technology firms, several startups here in Chicago, Groupon, MediaOcean, hedge funds. So that's where my experience comes from. At Tradespool, I'm very thankful to Tradespool. It gives me opportunity to have flexibility in my schedule, to spend more time with my family, drives kids to school. I'm going to talk about trading plans today. Ultimately, everybody on this call has a reason why they're here, whether it's flexibility in schedule, supplemental income, full-time income. But we all have reasons why we're on this presentation and what we're looking for. So from personal perspective, I have flexibility in schedule. From professional point of view, I do want to enjoy. I've been trading and managing my money for over 15 years. I've been mentoring and teaching Tradespool subscribers how to trade stock and options. And again, my background is I have a master's degree in computer science. We have a team of financial engineers that have PhD in mathematics, physics, economics, and we're building models to find price patterns in the market and predict future predictions on the stock. This is kind of my family. I'm proud of father of 4 kids, so you can see what I do outside of work. So I'm trying to find balance between work and personal time. Since I am going to go through some of the trading examples, I do want to make sure we take a second to look at the disclosures trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm going to show you a few examples of what I do in my own portfolio for general education and information purposes only. Please consult your financial advisor prior to making any decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. So at Tradespoon, we build our technology based on the 7 principles of profitable trading. So based on our experience, what we learn in the market, we believe in order to become a smarter, better investor, you have to follow these 7 principles. One, the first pillar of successful trading is to know what to trade, right? You have a lot of choices: futures, stocks, options, ETFs, indexes, Bitcoins. So first you have to learn what you're trading and follow the events and the news, and that can take a lot of free time. And as the previous speaker was saying, you have to follow the events. You have to sometimes analyze balance sheets. Sometimes you have to know what in the biotech stock, what event can trigger the stock to triple or quadruple in the price. So that takes a lot of time. And just out of curiosity, how many of you actually do fundamental analysis and follow the stocks in terms of the news events? When is a certain drug will be approved by FDA, or how when is the earnings of the stock? Reading, sitting on the earnings calls, looking at the data. Just raise your hand. Just say yes, I do technical analysis. All right. TJ, I am head of technology at Tradespoon. Yes, I'm the founder of Tradespoon. So some of you said, Rodriguez, BC, not enough time, don't have time. And that's kind of common feedback that we experience, is that most of the subscribers either have a full-time job, or they don't have time during the day to sit in front of the computer and analyze balance sheets, cash flow analysis, looking at when is the next, when will drug will get into approved by FDA, or when is the results of the next trial will come out. So a lot of that takes a lot of time and research. So somebody has to do it. So you either sign up for a certain newsletters, or you follow a certain portfolio, but this is something that you have to do in order to at least to be aware of all the events that can move the underlying stock. So once or underlying asset classes. So once you pick what to trade, whether it's Bitcoin or futures. The second thing is, how do you manage your positions? When do you get in? When do you get out of the positions? I'm going to talk about price patterns, right? You can decide to get into a position based on fundamental analysis, based on the research, but you also can get into a position by looking at the price patterns, right? And you need to know when to enter the position and when to exit the position. And very important is to, before you get into a position, decide for yourself, what is my stop loss? What is the maximum gain? And there are 2 approaches, right? The previous speaker said, well, you can diversify your portfolio. You can have 20 positions, and as long as you have 2 positions that go up by 600%, even if the other positions lose money, overall you will make money. You don't need to have all 20 positions to give you, triple-digit returns. And that's totally acceptable, right? You do your due diligence, you research, and as long as some stocks can triple or quadruple in prices, then your portfolio can grow. The other approach is that you look for certain percentage of the gain, 10% return, 20% return, 40% return, but you want to make sure that majority of your stocks give you a positive return. We will have some outliers, but as long as majority of your stocks are profitable and you're looking for smaller return. So the first case scenario, you have large returns, but have very small percentage of winning trades. The second case scenario, the second alternative is have smaller returns, but have larger percentage of winning trades. And both approaches are acceptable, right? You just need to solidify those rules and write them down. And when you enter the trade, you have to decide for yourself what is your maximum stop loss and what is your maximum target gain. And actually, out of the curiosity, just wanted to know how many of you actually have a trading plan where you decide before you get into a position, what could be your maximum loss and what will be your maximum gain before you enter position. It'll be very interesting to know if this is something you guys do as a trader. So I see some said no. Usually if you say no, that is, so Brian have a trading plan, Lewis have a trading plan, some people said no. So if you say no, you don't have a trading plan, you don't know when to enter or when to exit, you kind of, you found this biotech stock, you're hoping that the FDA will approve them, it will be a $1 billion drug, you just hold and wait. In my personal experience, working with the traders, if you don't have a trading plan with specific rules on when you enter the trade, when you exit the trade, usually that results in unnecessary losses. You might have one stock that will triple in price, but then you're going to have 8 stocks that have, 50% losses. And then overall, your portfolio loses money. So if you don't have a trading plan and you don't know when to enter the trade, when to exit the trade, that's a red flag. And we usually work with our subscribers to make sure that they do have a solid trading plan and they decide before they get into the trade, what is the maximum gain, what is the maximum loss, what is the maximum portfolio drawdown, how many positions they will have in their portfolio, and across each position, what's the maximum portfolio. And then you can have approach whether you want to have higher percentage winning trades, and with individual trade have a smaller percentage winning, or you look for fewer successful trades, but they give you a triple-digit returns. So you have to be patient and maintain long-term focus on your trading plan. Make sure that your portfolio is growing, and you want to learn how to manage manage your positions and hedge your positions. Right? We're going to talk about options and stocks, and options allow you to hedge your portfolio. There are other ways. You can invest in commodities, right? If stock market is growing, but gold or copper is underperforming, or treasuries are underperforming, there is other ways to hedge your overall portfolio. So you always have to have that mindset that ultimately S&P will not go up indefinitely, right? At some point, there will be 10-20% correction. The problem is that nobody knows when it's going to happen. It can happen tomorrow. It might happen, in July. So you have to have a mindset that certain percentage of your portfolio is always allocated to different hedges. And you can use puts, you can use options, you can use gold, silver, treasuries, and you can invest in Europe or developing market, and that's to diversify your risk. Okay. So managing risk and reward, one of the rules, whatever your decision to enter the trade, whether you're looking at the fundamental analysis and you're waiting for FDA approval of the drug, or whether you use some chart patterns and technical analysis, you want to make sure that you have statistics behind your decision. You know exactly how many, what is the percentage of the winning, how often you will be correct and how often you will be wrong based on your favorite technical or fundamental setup. And make sure that your risk is limited and your ratio between reward and risk is favorable. So managing this risk and reward position based on your favorite technical setup is very important. It should be documented, and then you can manage your overall risk. So very important to have this trading plan. If you don't have one, I'll share some of the trading plans we have at TradeSpoon. And you want to make sure that you solidify your rules and you follow them. You definitely can adjust them based on volatility in the market, but ultimately your decisions have to be documented, and you do have to keep a journal of your trading decisions. So towards the end of the presentation, I'm going to talk about Stock Forecast Toolbox. This is a tool, and I can show you quickly here. This is basically a tool where you can enter any symbol, Boeing, SPX, currencies, futures, and it will basically give you a prediction. It will give you a trend prediction, whether the trend is positive or negative. It will give you a model grade. Let me just refresh this. And it will, the most important, it will give you predicted low and high. So for each stock that you would enter, let's say you enter SPY, it will actually give you predicted low and predicted high, right? So you can see for January 26th, we predicted that the market will trade for Monday, I'm sorry, for this is now we're going into 29 for Monday. We see that the predicted price, what would 28, 29. So for Monday, we see the predicted what the range that the stock is going to be trading. It will trade between 282 and 285. And we're seeing slightly downward momentum in the stock. Right, we see negative vector. So the model thinks that the stock is kind of out overbought, and at some point the stock market will correct itself. So this is a tool that basically automatically looks at the price patterns and gives you prediction in terms of support and resistance. You can do this for 10 days. You can do it for 6 months prediction. Same thing for spiders. You can see where the stock will be in the next 6 months. By February, what the range of the stock market could be. And you can also do a 5-minute prediction using 1-hour predictions. So, and when you do have a trading system, very important to have yeah, if you guys cannot see, I think it's maybe something wrong with the it's very you might want to just maybe minimize and maximize your window or try to relog in, but I think most of the people can actually see the screen. And what is your YouTube channel? Yes, it's YouTube/Tradespoon. All right, so before we get into specific of the chart patterns, very important to have a trading system. So at Tradespoon, we do both the day trading, and we do longer term trading, swing trading, and trend trading. So for day trading and for swing trading, we constantly build backtesting, and we're looking at the results of our signals and what would be the returns if we follow our short trading plan. So we usually trade stocks with the 60% confidence level in our decisions, and the vector of positive 1%. And you can see here, I'm referring to this vector, right? So if we see that the vector is close to 1% or positive 1%, then we see that the stock is an uptrend. And then we try to enter at the predicted low. Right? This is a 6 months prediction. Let's look at the 10-day prediction for spiders. So we can see the spiders we're predicting 282. So at 282, that would be ideal price to enter the stock market. At 286, we see that the model sees that the stock market is overbought. So we would look for pullback to 282, and that's where you would enter your position. And then model runs and either based on our trading plan, we either buy at the open. So not only do we provide signals, we actually day trade them in our live trading room. So we either buy at the open and sell at the close, or we buy at the predicted low, right? Those are your two choices, right? You can wait for the low to be reached. Sometimes in the market like we have right now, you won't be able to reach the predicted low price. So you just buy at the open, right? So we have these two strategies, buying at the open or buying at the predicted low, which is usually lower than previous close. And you can see based on our live trading room, this is actual performance of our trades that we had in the past. You can achieve, by doing day trading, 10 to 20% monthly return. So we have a model that constantly runs and provides you with anywhere from 2 to 10 stocks. And based on these stocks, if you buy them at the market open, or if you buy them at the yesterday's or if you buy them at the predicted low price, and you can invest in 1 name, 2 name, 3 stocks name, then you can see what the monthly returns were in the past using this strategy. So what is the technical analysis, traditional technical analysis? Technical analysis is the method for evaluating stock prices or any asset class's price to see what the balance between supply and demand. Right? The idea is that if you're looking at the past, it can show you the future. At Tradespoon, that's the traditional technical analysis. That's usually a limitation of traditional technical analysis because it looks at the past and it things that the past will be repeated. And in a lot of the case, the past is repeatable, right? So you can look at the past and that can show you what the future will be. We also using predictive analytics that tries to make intelligent decisions, not just because the past, you have a certain pattern in the past, it actually tries to predict what will be in the future. So technical analysis, it does not attempt to, it doesn't look at the fundamental analysis, it doesn't look at the intrinsic value of the stock. It just looks at what do prices do during earnings announcement, right? The idea is that certain stock like Microsoft, Boeing, during earnings season, they usually have a certain price patterns. And then in between the earnings, based if they beat analyst estimates or they missed estimates, if you've seen in the past how these stocks behave in the next 90 days after the earnings season, we're in the middle of the earnings season, then you can find certain price patterns and follow them. All right, so what are the core elements of the price patterns? These are the tools for displaying data that reflects investor psychology and sentiment, right? If everybody looks at the, somebody asked me to look at the previous slide, so spiders. If everybody looks at the spiders and they look and they find, let's see, if they look at certain price patterns, right, certain support lines, they look at the head and shoulders, and everybody looks at the spiders and see head and shoulders are forming, then you have that kind of a herd effect that everybody knows usually, depends, if you reach the neckline or you haven't reached the neckline, what the next move is. Or if the 50-day moving average crossed the 200-day moving average on the upside, then everybody kind of expect that the stock market is going to continue to go higher. So we're going to talk about, so right now I want to cover the most common price patterns, flags, triangles, and rectangles. This is kind of traditional technical analysis, especially if you look at a daily chart and you're managing, and it's a swing trading or position trading, you're holding your position for a couple of weeks, maybe a couple of months, that these patterns usually hold certain percentage of the time. And that's another thing that's very important to understand. Whatever the tools you're using, so let's say you're using TradeSpoon. What we do in the TradeSpoon, we actually give you probability of success. Right? We tell you a certain price pattern, like head and shoulders. It might work 80% of the time for Boeing, but it might work only 20% of the time for Microsoft. And that's kind of a good question. I want to make sure that we, whatever technical analysis you guys use, how many of you actually have results of the success rate? Like if you're using, let's say, head and shoulders, or if you're using Ichimoku cloud, or if you're using unusual options activity, do you have any statistical analysis that says for this stock that I'm about to trade, or for this position that I'm about to get in, it's 80% accurate, or it's 20% accurate in terms of that signal being valid? Because all the signals that you'll be using, they're not 100% accurate. Some of these signals are 80% accurate. Some of these signals are 40% accurate. Some signals are accurate. There's a seasonal component. So the question is, whatever software you're using to make a decision of getting into the trade, how many, and whatever that software, you guys can share what that software is, how does that software actually gives you the accuracy level, or some kind of a backtest result that tells you it's 80% accurate, it's 20% accurate? So Brian said no. Anyone else? All right, Adele. Okay, so I don't think I see any yes. Not always. All right, so that's that's usually, I mean, it's not a flip of a coin. It's not a 50-50 outcome. We're going to talk about head and shoulders. So everybody knows, in general, head and shoulders, when it reaches, breaks the neckline and goes up on a large volume, it could be 65% accurate. It could be 70% accurate. The only thing we don't know, how many, the head and shoulders, how often is it successful for Boeing versus Microsoft, or gold versus copper? At TradeSpoon, we actually provide you with statistics. So all of our signals carry percentage accuracy. Basically, the model runs a backtest and says, for spiders, when we're predicting the low, when we predicted that on Monday the low would be 282.69, 75% of the time the stock market will close above 282.69. If I type in Boeing, we predicted that on Monday the low would be 337. Then 81% of the time, when the stock reaches, when Boeing reaches 337, the stock will close by the end of the session above 337. So as a trader, if you see Boeing trading at 337 and you know 8 out of 10 times stock will close above that level, that gives you an opportunity, that gives you an edge. And if you don't have these statistics, it's very hard to make an accurate decision in terms of your trading. So this is how the basic chart patterns look, right? We can see usually you have to manually look at the peaks and troughs, right? If you connect visually the peaks of this chart, you see that this is overhead resistance. Here you have overhead, underlying support, right? So these are kind of a traditional technical analysis. It could be sloping up, trading up, or it could be parallel lines. And we're going to talk. Let's start with flags. Flags. Now we're in the earnings season. Flags are very common patterns after the earnings season, right? Usually stocks like Netflix, they beat earnings announcement, or Triple M, they beat earnings announcement. On a large volume, they gap up, and then on a small volume, they start selling off. On a lower volume, because a lot of people were, invested in Netflix. It moved 10%. They're taking their profits. So at some point, the bulls will stop taking profits, and then you have kind of the next leg up, right? So these, and same idea goes for bearish patterns, right? So after earnings, that's one of my favorite patterns that I like. That if I see stock going up on a high volume, we have Netflix, we have UNH, Triple M, and then they sell off on a small volume, this is an opportunity to go long. So this is considered to be a continuation pattern, right? You have a slight pause in the current trend, and then you have stock going higher. So what does the setup looks like? Initially, strong short-term price movement after some kind of event. Then you have sideways price movement, right? You have a small sell-off. Bulls are taking profit on a decreased volume, right? You want to look at the initial price movement to the upside will happen on very large volume, and then on decreased volume you have a short-term correction, and then you have breakout against previous trend, right? You kind of have a continuation pattern, right? You have a sell-off, and then the breakout occurs, and you have a continuation pattern. Another pattern similar is the pennant, right? You see this pattern where you have longer consolidation, could be a couple weeks, and then you have a strong move to the upside. Then after flags, the other common patterns that everybody kind of follows are ascending triangle. And that's another common question. Vlad, do you do this for day trading? Do you do this for more of a swing trading? I usually apply traditional technical analysis for indexes or ETFs. So indexes or ETFs, 50-day moving average, 200-day moving average, ascending triangles, because everybody knows about this common price pattern, they hold true 60 to 70% of the time, which is great for long-term signals. If you know that ascending triangle holds 70% of the time, then you know that once it breaks this overhead resistance on a larger volume, right? On a larger volume, you have a overhead, you have a breakout. Then 70% of the time you have this continuation pattern, and the stock or the ETF or index will continue to go higher. So ascending triangle. How many of you use chart patterns in your trading? If you guys can, all right, so Brian said BC, yes. Also, how many of you can see my screen? I just want to make sure that you can see my screen. Okay, so most people said you can see it. If you cannot see my screen, what I would suggest sometimes I've noticed is that if you have a third-party add-on in your browser, you might want to switch your browser. If you're using Chrome, switch to Internet Explorer. But if you have a third-party add-ons that block ads or block filter certain emails. Sometimes they do interact with GoToMeeting, and if you just disable those add-ons for this presentation in your browser, then I think you'll be able to see it. I mean, I see most people are able to see the screen. I do have, I think, one person or two people said that they cannot, but that's something that I know in the past have helped. If you have some add-ons in your browser, then if you can just disable them. All right, so a lot of you said that you do use use chart patterns, and in our training plan we do have chart patterns. This is not very sophisticated chart patterns because we usually identify a signal based on the patterns in the market, and we just give you a trend, right? We tell you it's a positive trend. It might go up 1%, it might go 2%, we don't know, but we're seeing that in Boeing there is a uptrend. And ideally, you want to buy the stock at 337. Potentially, Boeing has been under pressure. A lot of people are taking profit, so it might drop to 325. We're kind of giving you this 10-day forecast, but overall, the pattern is still intact and it's positive. So, triangles. Ascending triangle is a pattern that appears during an uptrend when the stock begins to consolidate between a flat resistance level and upward sloping support level. So this green line is your support level, and it's ascending, right? You see ascending on this lower volume, right? You see this pattern, and it can take, again, months, can take a few weeks. And usually there is a certain event, maybe an earnings announcement, maybe some institutional trading, but you see on a larger volume, that parallel line, the overhead resistance is broken, and then the uptrend continues. So if you see pattern like this, especially after the earnings season, on the larger volume, then you know that again, 70% of the time you have this continuation pattern, and this ascended and this upward momentum will continue in the underlying stock, right? It's a continuation pattern. So pattern construction, it's intermediate term, right? We're talking about several weeks or months. We do look at the horizontal line, that's overhead resistance. We do look at the ascending line, right? If you connect the valleys, then that's ascending line. And the consolidation phase should happen on a decreased volume. The entry should happen on the increased price. And same goes for descending triangles, right? This is a continuation of the bullish pattern. The second picture is a continuation of the bearish pattern. And here you have support. The green line is a support, it's parallel, like a floor. And then you have a descending line, triangle. And then usually after some kind of event on a larger volume, you have a sell-off. And also symmetrical triangle, right? This is ascending, this is descending. You can also have a symmetrical triangle, but it's also going to be a continuation pattern. All right, another very common pattern is rectangle, right? Instead of a descending triangle or triangle pattern, this is connections of two parallel lines. And that's where, head and shoulders, you hear on the news a lot when people talk about statistical analysis. This is the most common patterns they identify: head and shoulders, triangles. So you have a head and shoulders, you have inverse head and shoulders, and this occurs when you have two parallel lines, right? If you connect the peaks and valleys, you have parallel lines that, again, usually can take several weeks to a month. Sometimes these patterns happen within one earnings cycle. Sometimes they happen within multiple earnings cycle. That's why sometimes it takes weeks or months for the pattern to occur. Again, setup, pattern construction, it's an intermediate term trend. Short-term trend creating similar high and lows, right? You can see similar highs and lows here. Then you have a parallel line. Usually you have two or more touches on both support and resistance, and it's decreased volume. The breakout usually happens on large volume. Again, some kind of event triggers, and in a large volume you have reversal of the pattern. Unlike flags and ascending triangles where this is a continuation pattern, this is a reversal pattern. And usually it happens to a stock that have bad earnings announcement, right? The stock had a bad earnings announcement for a couple months, but it's a strong stock. right? It's a strong stock. It had a few bad quarters. It sold off, but overall, it could be seasonal. Overall, the underlying fundamentals of stocks are strong. And then at some point, after the earnings announcement, it could take one or two earnings announcement, you have this large breakout in the volume, and they have a positive earnings outcome, and then you have a reversal in the pattern. And again, Jeanette had a question, what time frame? Usually it could be a couple weeks or it could be a couple months. Some of these patterns, again, it could be within one earnings season, within 90 days, or sometimes it takes two earnings announcements. So you might have to wait, 6 months for that reversal to happen. I notice, sometimes people ask, is it applicable for day trading a very short period of time? Usually, I personally don't trade on head and shoulders or ascending triangles when I do day trading or short-term trading. These patterns, usually, they take weeks or months to take place. So if you're a day trader, you usually don't follow these chart patterns. And why patterns are important? It's always important to be aware of dominant trend, right? You don't want to trade against the trend until trend is broken. You can clearly see that if you look at spiders, the trend is positive. If you look at this, you can see the strong uptrend, and now we actually see a downtrend, right? So our software actually does detect short-term correction that the market overbought, but the model doesn't know exactly when it's going to happen. It can happen tomorrow, it can happen a week, but it definitely sees that based on historical patterns, the market is overbought. But again, the idea is that do you short the market? Probably at this point, we're not in a recession and we have strong earnings momentum, we have tax reform, so there is no red flag. So this strong upward momentum might continue for the next couple of months. So this just tells you, you don't really have to go and trade against the trend, but if you see market correct itself to 279 or maybe 274, at that point, this is a support, and this is where you might consider entering the trade and go long, right? And same thing goes for gold, right? We talked about commodities, and it was a previous discussion. You can type in gold, and gold has been in strong uptrend, right? This is kind of a reverse. Gold has been in strong uptrend, right, this year, and you can see from December and January, it's been trading in a strong uptrend, right? We had some short-term correction. This is, if you do day trading, you probably want to go short, but overall, we're seeing that long-term, we see uptrend in gold, right? We're seeing that gold is continuing going higher. And we talked about Freeport McMoran. Let's look at FCX. Same thing. Granted, it's announcing earnings. We do see a positive trend. Short-term, we see a short-term correction, a downward momentum, but overall, for the next 10 days, we see, as we approach in the earnings announcement, it is in uptrend. Let's look at the 6 months prediction. Six months, we actually see a downward momentum in copper. Well, because, as we've seen, copper has been trading in downtrend for a very long time, right? So the model sees that as of right now, we do see short-term upward momentum, but then the model actually sees that the downward, the long-term downward momentum will continue in the copper. Trades for strategy to trade on the numbers, not the chart. That is true. We do provide you with this estimated support and resistance, but you still want to you still want to look at the charts and the patterns, right? Because ultimately this gives you support and resistance, and it's pretty wide, right? It's 40 cents apart, 2% apart. Just for Monday, we're seeing potentially 2% move in Freeport McMoran. So you wait for the predicted low or you wait for the predicted high. Ideally, you don't want to go long at 1973 because that's where the stock is overbought. And you don't want to go short at 1936 because that's oversold. But you still want to look at the patterns, right? You still want to look at the 5-minute patterns if you're doing day trading at the chart. and to help you determine, where support and resistance. So usually it's a combination of two. I mean, you can, of course, always rely on the predicted low, but when the stock is in between or it didn't reach 1936, sometimes if it's 1940, but you see a support in 1940, it makes sense to enter the trade. So BC, thank you for the question. The question was, if we predicted low and high, why do you even need charts? And the question is, some people do just trade based on these signals and based on predicted low, but usually you do want to have some kind of a chart patterns and look at the chart to see where the support and resistance are. Do we access, Adele had a question, do we access to the backtest stats of the pattern breakouts? We do have stats, right? So all these stats for all of our signals give you statistics. So this basically tells you, well, we only correct 42% of the time in terms of predicting up or down, right? So if we say free poker man is up, only 50% of the time we correct whether it's up. This is a very small vector, right? Very small magnitude movement. So here we're only 50% of the top right, but we're 90% of the time correct that on Monday it will trade above 1951, right? That's where 90% accurate that it will close higher than 1951. So if the stock gaps down at the open to 1940, this is a very volatile stock, then this is an opportunity to go long because you know that 9 out of 10 times it will close above the predicted low. So Adele, we do give you ability to have access to all these statistical analysis. What does the model grade mean? Well, model grade basically means we analyze 3,000 stocks. So for some stocks, like, what was it, SPRT? I think we were talking SPRT. Some of the biotech stocks, the model is NA. It's very volatile, not a lot of volume. It's a penny stock, so we don't give you model grade. We don't give you statistics how often the stock, how often the low or high will hold true. Because it's a penny stock, and it doesn't mean it's wrong. Ideally, you do see that this is in strong uptrend and trading to the upside. And ideally, you do want to buy it at 280. It is oversold, and 297 it is overbought. But we don't have the statistics. But for other stocks like JP Morgan, where they've been trading for a long time, they have a long history of trades, we can identify the patterns. Then Model A means that for JP Morgan, we're 100% accurate that when it reaches the low, it will close above the low. And 75% of the time, we actually accurate that if we estimate in a positive change, then JP Morgan will actually close higher than Friday's close. So model grade basically emphasizes this concept that not all the signals or not all statistics are created equally for all the stocks. Whatever the price pattern you're using, or whatever the technical analysis you're using, or even fundamental analysis, it doesn't work the same way for all the stocks for all asset classes. Your ascending triangles might work great for Microsoft, but it's not going to work for Boeing. Or it will work during summer, but it's not going to work during winter. So these patterns, you need to have statistics that tell you when the signal is created, how often will the signal hold true. And this model grade basically gives you a sense that this specific model for JP Morgan works great. But, for Citigroup, let's look for Citigroup. Well, it also works great. But for some other stock, let's see, WFC. I'm just going through the bank stocks. It doesn't work as well. It still works pretty well, but Wells Fargo, only 80% of the time we are correct on predicting low and high, and only 50% of the time we correct on predicting whether it's going to be up day or down day. And that is very important. So whatever tools you're using or whatever signals you're using, you always want to ask yourself a question. When I get into the trade, based on my backtest, how often am I going to be right? And if you don't have that information, it's almost like flipping a coin, right? You're right. You're going to be right 50% of the time, like this. So then you can't really rely on this estimate. If we say Wells Fargo is going to be up 10 basis points and it's going to be down 10 basis points on Monday, a lot of subscribers will call and say, well, it was down 10 basis points, but you said it's going to be up 10 basis points. And I'm going to say, well, we were only accurate 54% of the time. But if Wells Fargo reaches 65.53, then I can say, well, 80% of the time, Wells Fargo on Monday will close above 65.53. And yes, the buy and sell signal is only for 1 day, right? This is only for 1 day. The trend is for 10 days, right? So if you look at the trend, this is the trend for the next 10 days. So you can see overall bank stocks are in positive trend. So the buy is just for today based on this vector, but overall the average trend is positive. Isn't 100% probability overfitted? 100%. So that's Adele, very good question. So the question Adele had, 100%. Nothing is 100% accurate, and it is true that nothing is 100% accurate. All this means is that in the past, we've been analyzing in the past 60 data points. In the past 60 data, in the past 3 months, every time we predict the low, it holds true. Sometimes the difference between low and high is too big, and we're talking about overfitted model. But that's what this number means. That if Monday we have a sell-off in the financial sector and JP Morgan reaches 115.70, you know that in the past the price will close above that low. But it doesn't mean that it will, right? Nothing is 100%. So this just talks about in the past. It doesn't guarantee that in the future it will always be, the predicted low will always hold true. So Adele, thank you. This was a good question. All right. So that's the patterns. And again, very important to have a trading plan. So a TradeSpoon question was, what about long-term signals? So we have smart trading guides, and we do have trading plan for day traders, so short-term trading plan. We also have a long-term trading plan for swing traders and long-term traders. These models that we created, we have optimized for both short-term trading and for long-term trading. Sorry, I missed this. Right. So the same models that you've seen on the short-term trade, we also have for longer-term trades. You have different screeners that you can actually utilize to find candidates for both long-term. If you go to company screener, I just want to show you some of the screens that you can see both. This is for next 30 days, and these are for short-term trades. This gives you all the stocks in ETFs with grade and B, very popular. This is all the stocks with grade A and B, but also that are accurate in predicting the direction, right? So we have these different screens. So, and this shows our trading plan for short-term trading. A lot of you, this is actually a long-term trading. This is our swing trading. I'm using option spreads trades. So this is option trading, and it shows the trading plan that we've been follow at TradeSpoon. So at TradeSpoon, using these signals, you can, and we're transparent about our performance. You can go and click on this premium performance. It actually shows you the actual trades using option spread trades. We're very transparent. It shows you all of our winning, losing trades. You can see we've been accurate over 80% of the time using option spreads. On average, we look for 20 to 40% gain using option spreads. And that's the trading plan that we showed here. And a lot of you said that you don't have a trading plan. You don't really know when you're going to get in or when you're going to get out of the trade. So then you can adopt our trading plan, and we assume that you have $10,000 portfolio. You allocate 5% of your portfolio per trade. That's $500. On average, in our swing trading, I hold the position for 30 days. If you look for 20% return, that's $100. 20% of 500 is $100. And if you trade once a week in a year, then in the past at least, without the commission, without the fees, potentially you can have up to 50% return a year using these option or option spread strategies. So that's the trading plan. This is something we always backtest and make sure that we provide valid signals. And we also, not only is this a hypothetical backtest, but we actually trade in these portfolios. So I know we're kind of running a little bit late, so I'm going to wrap it up. I do want to talk about we partnered, as we said, partner with Metastack, and we do have the software that I went over is actually available to you if you're a Metastack subscriber. Or if you're a Tradespoon subscriber, it's available for you, to use if you have a Metastack. If you have a Metastack but you don't have a Tradespoon, we're going to talk about this free trial that we're providing. But this is how it looks at the Metastack. So at Metastack, some of you mentioned that you don't show the charts. That's true. We don't have live streaming chart with complicated traditional technical analysis. We're not in business of charting software. Jeff is going to talk about best of the class charting platforms. So that's why we're providing our signals inside of the charting platform like Metastack. So you can type in any symbol, A, Boeing, Microsoft, any currency pairs, and we will tell you what the support and resistance lines are and whether it's a buy or sell, right? That's what you see on your screen. And we can show you the model grade, we talked about that. And we're also going to show you what the 10-day support resistance levels are, what a 1-day support resistance levels are. So if you want to kind of one place so you don't have to switch screens and you want to see a chart, streaming chart or delay chart, and you want to see the signals, we build this Tradespoon Stock Forecast Toolbox add-on. Again, it allows you, if you have a Tradespoon trial or Tradespoon subscription, you can use Metastack, basically, Tradespoon add-on Metastack for free. So you can analyze any stock, ETF, future, currency pairs. On Tradespoon side, we are also giving you a company screener that I briefly covered, showing you short-term trades, long-term trades. We actually provide 3 bullish, 3 bearish ideas every day, every week with specific entry prices and exit prices. That's part of our newsletter. As part of the Stock Forecast Toolbox add-on for Metastack, it includes what I just showed you: support, resistance, historical predictions, predicted close price. We have Tradespoon template where the screenshot that I show you, the expert advisor with 10-day support, resistance levels. We have different scanners only available on Metastack. You can scan NASDAQ stocks, you can scan NYSE stocks, and we will tell you which stocks have A grade, which stocks have grade B grade. And finally, just want to cover how much does this cost? Well, we're giving you a 30-day free trial. So if you go to tradespoon.com/Metastack, you can get 30-day free trial, no obligations. What the trial gives you is ability to play around with this tool, Stock Forecast Toolbox. So you'll see the Stock Forecast Toolbox. We also give you access to active trader stocks every day. This is Friday. We give you 3 bullish, 3 bearish ideas, and you can see. We gave you financial stocks. We try to diversify BBCT. We recommended to trade at 1990, close at 1991, but it was as low as 1980. So if you follow these levels, then if you traded in 1980, that's 0.5% gain. Anthem had a strong uptrend. That was another bullish idea. Cisco had a strong uptrend, another bullish trade idea. So as part of this trial, you have access to these bullish, bearish trade ideas with specific entry and exit price. You have access to the Stock Forecast Toolbox, to Futures Forecast Toolbox, to Bitcoin Forecast, Forex. So you can, depending on what you're trading, you can predict all the major asset classes. If you're in love with Metastack, this trial also, the same user ID and password that you will use to access Tradespoon, the same user ID and password you can use. If you have a Metastack, you can try our add-on inside of the Metastack.
I'm in love with Metastack.
I'm in love with Metastack. Yes, this is right.
All right, good job, Vlad.
Thanks a lot. Do I have a couple more minutes to answer the question, or do you want to just?
Oh yeah, go ahead. Go ahead.
Yeah, so I'll try to be clear. So BC is the platform web-based. Our platform is web-based. Metastack requires download, but Tradespoon is a web-based platform. So we don't have to download my platform. all of our decision 100% technical, 0% fundamental. So for sure, the question was, are you technical or fundamental? So for short-term trading, we believe fundamental analysis is irrelevant for day trading, right? It doesn't really matter. I mean, you should know if somebody is announcing earnings. Somebody asked about Wynn Resort, so, but, Wynn Resort on Friday sold off like 10%, but that was an event, right? No model can predict it, that there would be a, sexual harassment lawsuit against the CAO, and it will come out, at 10 a.m. During Friday, right? And the market sold off. Yeah, our model did not predict that. So we predicted that it will be 200, but it closed at 180. A lot of people would call and say, Vlad, the stock is down 10%. Your model is completely wrong. Yes, it's completely wrong because the model ran on 6 p.m. on Thursday. It did not know that the stock will sell off 10% due to this event. Longer term trading, we do combine fundamental analysis. So we have the same service for active investor service. This is more of a fundamental and technical analysis. So model ran last Friday. We recommended Costco. And you can see from January 22nd, Costco had a strong uptrend. So when we analyze Costco and we provide the signal for Costco, we combine technical and fundamental analysis. So thank you for the question. So yes, I pull up Wynn Resort. The model did adjust to it, but it's going to happen only on Monday. So the model will run on the weekend, and only then it will adjust to the event. But on Friday, it did not know about that news, so you'll have to wait till Monday to see that adjustment. So thank you for the question. All right, Jeff, it's all yours. Thank you again, Jeff. Thank you for having me. Everybody on this presentation. Thank you for listening to me for almost an hour, and I hope to be back soon. Thank you.
Thanks, Vlad. Really appreciate your coming in here and spending some time with us. And we're going to, let's go ahead and switch the slides back. And we're getting kind of to the end of the session today. Just a little bit more to go. I have a question for you guys. How many people, you can raise your hands if you would, how many people have been here since we started this morning? Very curious. We have about, just so to give you guys some numbers, we have about 286 here right now. We have about 1,200 that have left. Okay. A lot of you are saying yes. And a lot of you are raising your hands. So I don't have an exact number, but it looks like we have about 4% plus a lot of people that are saying yes as well in the chat room. So Scott, hey, I haven't seen you talk today. Scott, welcome to the event. I'm going to go ahead and let's go ahead and share, change the presenter back here. I'll also ask you another question. And I won't name names, but who was your favorite speaker today so far? And while you're doing that, everybody got quiet. All right. I thought today we had a great lineup, personally, between Tony Turner, Vlad, John Bollinger, Brian Rich. I'm gonna miss somebody here, but I thought today's lineup was particularly good and particularly strong. So I hope you enjoyed it. I hope it's been a good day for you. And yeah, I wanted to ask before, Scott, I wanted to ask that question before I started. So I didn't kind of muddy the water up a bit. So in any case, welcome. Thanks for coming. I really do enjoy throwing these events together. I do want to say thanks to Modern Trader for publishing, for publishing since 1972. For sponsoring today's event. Again, it's a great magazine. Again, they sent a bunch of copies to me. Again, it's a very, very interesting magazine, very unique. Has some really good recommendations, perspectives, insights. A little bit different of a magazine that you might be aware of. And what they're going to do for coming today, and as part of the sponsorship, is they'll just give you a 4-month free trial. They don't even require a credit card. They're that confident that you're going to like the magazine. So let me go ahead and paste the link. There's been some questions all day long about the promo code, because apparently if you go up there, it might have a promo code. It might be filled in. It might not be filled in. So I was looking at it earlier. If you go up there to sign up for that promotional offer, and it asks you for a promo code, all you're going to do is type in PROMO, promo, all lowercase, and it'll let you straight through. So there's a link to do that. And we're going to go ahead and kind of just shift gears a little bit right now. What I want you guys to do is to maybe stand up, stretch a little bit. Let's kind of power through this last session of the day. A few notes, because these questions always come up. Number one, when you signed up for today, you had the opportunity to get quite a few bonus offers, like the Modern Trader offer, or each of the presenters had a bit of a special offer. So for that, for those particular bonus offers, what's going to happen is early next week, whatever offers that you elected to get, you'll be emailed those. So we didn't forget. You're going to get your bonus offers. Just the normal process is we wait until the registration for the summit's over, and then we send out the things so that we can do the fulfillment all at once. Okay. Number two, are we recording today's session? Well, I'm glad you asked. We are actually recording today's session. We're going to make it available. It usually takes the video team several days to get through it. I anticipate that I'll have the recordings available to you by Wednesday. What I will do is, as soon as they're available, I'll send them out to you. So, and those generally tend to be the majority of the questions that we actually get. So, yes, everybody did an offer, and so if you opted in for those offers, BC, there you go. So. Tony did a great job. Yeah, there's a lot of people saying Tony and John. Only one person said Jeff, but that's fine. I haven't actually talked yet, other than emceeing this thing. The last thing that I would say before we kind of get into my part of the presentation, which I'm going to keep brief today, is there will be a survey that you'll get after the session is over. I'd ask you to answer it. And if you have any suggestions or things that you'd like to see in the future, please answer. I love those surveys. I read them every time, and I'm always looking to kind of see what I can do to make these events even better.